Stocks are sinking sharply right now. The Dow is down. Take a look at this. The Dow is down right now a lot of points, 1.64, 1.65%. The Dow Jones is down 729 points right now. That's a big number. This morning's lackluster jobs report and President Trump's new tariff policy clearly having a major impact. The Labor Department says just 73,000 jobs were added to the U.S. economy in July, far fewer than expected, and revised figures show June with the weakest job growth in more than 4 years. President Trump is also cementing his break with America's longstanding free trade policy as he announces sweeping new tariffs for the entire world. More than 60 countries now face higher rates. The new tariffs for any country with a trade deficit is now at least 15%. And more than 24 nations are being hit with an even higher percentage. These new rates will go into effect on Thursday. CNN is covering all the angles with Kevin Liptak over at the White House. Matt Egan in New York. Matt, let me start with you on the jobs report. Update our viewers.
Yeah, Wolf, this was an ugly report about the most important part of the U.S. economy, the job market. We learned this morning that the U.S. economy added just 73,000 jobs in July. That was weaker than expected. The unemployment rate went from 4.1 to 4.2% as expected, still low but moving in the wrong direction. But the big thing here that has economists and investors on Wall Street alarmed is the fact that the U.S. economy added almost no jobs at all in May and June. There were these massive revisions downward to those 2 months, showing that the economy added about 250,000 fewer jobs than previously known. June at just 14,000. Some context, that's the lowest since December of 2020. When you dig into some of these sectors, almost all of the job gains in the month of July came from one sector, and that is healthcare. Other sectors, including manufacturing and business services professionals, they lost jobs. Leisure and hospitality, job growth in that key sector, that's bars, restaurants, hotels, it slowed to almost a complete standstill. And so why is this happening? Well, two big things. One is the immigration crackdown. That is making it hard for businesses that want to hire to find the workers that they need. The other big factor, of course, is this historic trade war. All of this chaos with tariffs that are seemingly changing by the hour, it's paralyzed a lot of businesses. CEOs, they may want to hire, but they feel like they can't because they don't understand the rules of the road. The bottom line here, Wolf, the job market has been so resilient for years, but right now it is coming under significant pressure.
A lot of pressure indeed. I want to get to the new trade policy that's unfolding, Matt, right now. Some countries are celebrating their new tariff rates while others are slamming the U.S. Give us some perspective.
Yeah, absolutely. We're looking at historically high tariffs from the Trump administration. The big key here is that countries that have a surplus with the United States, right? Countries that the United States has a trade surplus with, their minimum tariff is going to be 10%. Countries that the United States has a deficit with, it's going to be 15%. That's the new minimum. But we also know that starting on August 7th, number of countries are going to have even higher tariffs than that, including Taiwan at 20%, India at 25%, South Africa 30%. Canada on the non-USMCA compliant goods, 35%. The highest in the world is Syria. The other big development is the White House has announced a 40% tariff on transshipments. These are goods that go from high tariff countries to low tariff countries before they come to the United States. This is a 40% tax on top of existing penalties. Bottom line here, Wolf, is we are talking about historically high tariffs that we have not seen in the United States in almost a century.
Interesting. Kevin Liptak is joining us from the White House. Kevin, the president has been negotiating with two of America's biggest and most important trading partners. We're talking about Canada and Mexico, our neighbors. Where do things stand on that front?
Yeah, and I think the relative fate of Canada and Mexico gives you a good illustration of how the president has approached all of this, because they have fared dramatically differently in this trade war. When it comes to Mexico, President Trump spoke to that country's president, Claudia Sheinbaum, yesterday and announced this 90-day reprieve from the heaviest tariffs. So they'll remain at 25%. They were expected to hit 30%, but the president held off as he tries to work on this new trade deal with that country's president. He says that their relationship is improving. He says that the southern border makes a uniquely complicated trade deal to try and strike. Canada has fared very differently. The president jacking up tariffs on Canada from 25% to 35% for what he says was lack of cooperation in trying to combat the fentanyl crisis. The president has had obviously a very testy relationship with that country and with its new Prime Minister, Mark Carney, who said in a statement that Canadians will be our own best customer. He says that they'll work to diversify their trading relationships throughout the world. And so in these two examples, I think you have a good illustration of how the president is approaching all of this. One, these interpersonal relationships continue to be very important for the president. But when it comes to Canada and a number of other countries, you see the president using tariffs and using trade to try and exert his other geopolitical priorities. I think the other big question is whether all of this is set in stone. The president has obviously in the past shown a degree of flexibility on these rates. I think it is clear, though, that we're now entering a very different trade era.
Economist and the president of the Budget Lab at Yale University, Natasha Sarin, is joining us right now. She was also a counselor to President Biden's Treasury Secretary, Janet Yellen. Natasha, thanks so much for joining us. I'm anxious to get your thoughts on the July jobs numbers that were just released this morning. Economists expected a much higher number. What's your reaction?
Well, my reaction is that what we are seeing in the economy is that the tariffs are really starting to bite. Because what happened this month is the labor market has proven to be weaker than we anticipated, both for this month here in July, but also these really substantial downward revisions for May and June, which indicate to us exactly what the models that my colleagues and I at the Budget Lab have been producing, which is when you have tariffs at these incredibly high levels, the effective tariff rate in the economy now, post all these new deals that we saw over the course of the last few days, is at about 18%. That's about 7 times what it was when President Trump took office. And that is going to lead to a smaller economy. It is going to lead to 500,000 fewer jobs in the economy. And frankly, that's what we're starting to see.
And as you mentioned, Natasha, numbers for May and June, jobs numbers, were revised down dramatically by more than 250,000 jobs. May saw just 19,000 new jobs added. June had only 14,000. These are huge decreases from where they were previously reported. What does this tell you about the numbers?
Well, what's really interesting, Wolf, is that I think it kind of comports with what you might expect in a world in which there's just so much uncertainty around where these trade deals and where policy is ultimately going to land. Because if you're a business in this country and you're trying to think about making decisions about new workers to bring on, or where it makes sense to invest, or where it makes sense to build, you're frankly in wait and see mode because you don't at all know the environment in which you're going to be operating in. You don't know how much it's going to cost to import parts to build those cars. You don't know the environment in which you're going to be able to bring in different types of products that you need to be able to sell if you're a retailer. And so I think what the economy is reflecting is that that type of uncertainty really has quite seismic consequences. And we're starting to see it show up in the labor market. Also this week, though, you're starting to see it show up in inflation. You're seeing durable goods inflation. That's particularly the sectors where the tariffs are having the most bite. It's things like furniture, consumer electronics. Inflation in the last 6 months has been grown at the highest rate that it's grown at any time in the last 4 decades, absent the pandemic. So this is an economy that sort of on both dimensions, with respect to inflation and with respect to the labor market, is showing signs of real challenge.
The president has been claiming almost every single day that the U.S. is the, quote, hottest country in the world when it comes to the economy. Listen to what he's been saying. I want to just play this clip.
We have the hottest country in the world now. We're taking in hundreds of billions of dollars. We have the highest stock market we've ever had. We have the best numbers we've ever had.
So, Natasha, what's your reaction to that? What do the numbers actually show?
Well, the thing is, when President Trump took office, we actually had a very, very strong economy. The labor market was very strong, and you had inflation. It hadn't gotten all the way back to the Federal Reserve's 2% inflation target, but it was well on its way. The sort of challenge that the economy is facing right now isn't that we've had a financial crisis or that there's been some sort of seismic event like COVID. What's happening right now is we have this man-made crisis that's come as a result of these trade wars, where it's impossible for businesses to make any real decisions about how to think about investment, and also where consumers, because essentially tariffs are a tax on literally everything the American consumer is buying. When you tax those goods, you make them more expensive, and that impacts the pocketbooks of the American people to buy those goods, but also changes their choices about other goods that they're going to be able to buy if the prices of things they need for things like back to school shopping or buying a new car have increased so dramatically.